Welcome back. We are coming to you live this week from the World Economic Forum here in Davos, Switzerland. More now of my first on Fox conversation with Bridgewater Associates founder and co-chief investment officer Ray Dalio. Here's what he said about the Federal Reserve. You have suggested recently, you were on with me 2 months ago, and you said the Federal Reserve is not going to be able to raise interest rates. You were right. That was way before the market actually understood that. Do you think the Fed won't be able to raise rates at all this year?
I don't think they'll be able to raise their rates at all. I don't think they should raise rates at all. And I think that I'm very glad that they learned. Okay, there was a change. And now
there was a pivot.
There was a pivot. And now we're on a situation where I think they're attuned to those issues. And so I think that that's much better. I think you will see a slowing that is more than they would expect. And I think it'll be a global slowing because we have to look at ourselves within the context of Europe. It's slowing. China, it's slowing. And when those things are happening and connected, I think that it's they won't raise rates. And it is conceivable that if you were to take another year or so, that they might need to ease. And that now might be through the balance sheet. And then we deal with the question of Europe. How does Europe ease when you have a negative interest rate? And quantitative easing has already done most of what quantitative easing could do. And the same applies to Japan. So I think that's the nature of the situation. But there's a greater now awareness than there was just a few months ago at the Fed and other central banks.
It sure is. And final question, how worried are you about debt? Because it seems like this is another issue that we talk about it, but there's really not that much of a focus on it. But given the budget deficit, the overall debt of America, the spending that we continue to see, where's this going?
Yeah, there's the debt, and then there's the unfunded liabilities that are like debt. If you take pension liabilities and you take health care liabilities, and you do a pro forma financial statement on all of those, can those be met? They cannot be met. And then what does concern me is that that amount of debt that you're referring to then has to be sold. And when I do the calculations of who are the buyers of that, I have concerns about that issue. So we've been blessed by being a reserve currency. And what happens, it's a two-edged sword. You're blessed because when you're a reserve currency, you're a storehold of wealth. You know, if they want to say, where am I going to save? I will save in U.S. dollar bonds and so on. But when that happens, historically, that puts countries in the positions of being borrowers and greater borrowers. And I think that that's our issue. So things as they evolve over the next few years, we can't take for granted that we're going to be able to sell that debt and fund out that debt without disruptive consequences. Those disruptive consequences could be the depreciation of the exchange rate or the slowing of our own consumption. Yeah, so I'm concerned about those things in an evolutionary way.
In the face of all of this, you've been investing incredibly effectively. You were up almost 15% last year while everybody else was down. How do you keep that growth going? How do you keep that kind of performance? Would you put new money to work today in equities?
I think a few things I want to say about that. I think the way that we manage money, and I think the way people should manage money, is that they should start with what is a balanced account. If I had no idea what's going to be good or bad, how do I achieve balance in my portfolio? And then that's beta. And then there's how do I take bets? How do I overweight or underweight certain things? And that's alpha. And I would say what happens is right now we have a leverage long position, like everybody is one directional. So in other words, in our particular case, there's not such thing as a good year. I mean, going up or going down is something that matters to us. We want to not have any systematic biases. I think the world is leverage long. In other words, everybody's long assets, or if you think about employment and what is a good economy, everybody wants everything to go up, and so do central banks. And so we make a system in which the credit is put in and interest rates are lowered to maximize that. when you start to get to zero interest rates and you go beyond zero interest rates and you buy assets to make them go up in quantitative easing, you start to approach the limits of that leverage long. So I think the important thing is to not have any systematic risk, to hold a portfolio in a way that could do equally well regardless of the direction of the economy. If growth picks up or declines, or inflation picks up or declines. And I would say for most investors, what that really means is not to try to guess the movements, because they have to compete against professionals and it's tough enough for professionals, but really to know how to create a balanced account so that they don't have those systematic biases. And that's a whole other conversation maybe we can have someday.
Ray Dalio, thank you.
Thank you.